There is still a lot of talk about rising inflation causing increases in the price of all sorts of goods and services. And as we know, one thing that's gone up a lot is the price of gas. To talk about both those issues, our financial expert, Bruce Allen of Bruce G. Allen Investments, joins us this morning. Bruce, good morning.
Good morning, Gary.
So inflation, is it causing gas prices to go up, or is it the other way around?
The other way around. The fact that the U.S. economy is gradually opening up and we're seeing significant economic growth means that people are no longer staying at home. They're driving more, they're flying more, and that demand for fuel and gasoline has increased the demand for crude oil, and the crude oil prices have been rising fairly significantly this year. Crude oil was at around $48 a barrel plus when we started the year. It's now over $70 a barrel.
So what kinds of gas prices are we seeing? I know in Colorado they're up over $3. Is there any indication it's going to go down anytime soon?
Well, nationally, we started the year at about $2.25. We are over $3 here in Colorado and elsewhere in the United States. And it really depends on where oil's moving. There was a pretty dramatic OPEC meeting last week. And the OPEC meeting, there was a standoff. There are some countries that would like to increase production as prices have risen, and some countries like Saudi Arabia that are actually saying, no, let's wait, let's hold on to the price increases we've got and not increase production. Also, U.S. producers have been very disciplined about increasing production. So this kind of discipline, which is a little bit unusual, when oil prices rise, people usually pump a lot more oil. Both OPEC and the United States have been actually constrained or very disciplined about increasing their production, and that's causing prices to stay high. It really depends on whether we're going to see higher production or whether we're going to see continued discipline on where the price of oil goes, Gary.
That's interesting. I mean, they all lost so much money over the last year that maybe they're trying to get some of that back. I suppose one good thing to come from all of this, though, is higher energy stock prices, right?
Yeah, the energy stocks have led the market this year. They're up over 37%. Some indexes of energy stocks are up over 40%. And we've seen significant drive higher in those prices of those shares. So big energy companies, oil companies, natural gas companies have been leading the market higher. They're much higher. They're up there, the #1 performing sector this year, Gary.
Having said that, are you advising people to get energy stocks?
No, I think probably the best thing to do is be diversified. Energy stocks can go up dramatically if, like we said before, if OPEC and U.S. shale producers continue to show significant discipline and restraint in terms of production, we'll see higher prices of oil and likely higher prices in those stocks. They tend to move with the price of oil typically. Also, we could see a much more increased production by both producers and some of the nations in OPEC, and that could cause prices of oil to fall. Also, so energy stocks are a volatile group. You want to make sure that you remain diversified. Secondly, the bond market does not believe this inflation is real currently, and that's just right now. The bond market you've seen interest rates plunge today to 1.25% from 1.78% on the 10-year Treasury bond. So the bond market is saying, I'm not so sure. And the bond market tends to be a more reliable indicator than the stock market, Gary. So we're watching bonds and watching this carefully to see what's going to happen next.
Very interesting. All right. As always, we appreciate your expertise. Bruce Allen, thank you much.
You bet.